Good morning all and welcome to today's video. So today I have three pairs on watch and those are Kiwi dollar, pound Kiwi and dollar Swiss. So my favorite of the bunch, I was just going through these a moment ago and just doing a bit of reforecasting, and I just put initially I had pound Kiwi at the top of my list, but I've just juggled them around and put Kiwi dollar back at the top of the list, just because I think it's a bit more clear cut. But without further ado, let's break these down for you. So Kiwi dollar, my favorite of the pairs. If we look at this on the higher time frames, you can see the first things that stand out to me here is that we have a series of near misses. Okay, so we have a near miss to this high, a near miss to this high, and a near miss to this high. Okay, meaning that at some point we're likely to find our way back up to take out all these near misses and tap into this high that we keep near missing to. But as I've said previously, that doesn't always mean that we have to do so straight away, okay? Because we also have a near miss here to this low, okay? And we're clearly in a state of continuation. How do we know that we're in a state of continuation? Well, you can see here we had an impulse down followed by what is a completed piece of structure. We had this high here, there was volume accumulated here, price came up, it wicked to it, come back up, we near missed to it ever so slightly, we come down, we eventually break above it and then push to the downside and completely smash below this structure. So that is a state of continuation. It's slightly wide one, but we have an impulse correction continuation. Okay, price then leaves a footprint. We have further confirmation of the move to the downside by way of the move down consolidation. Price leaves a footprint there. We push to the downside. We scoop all the way back up. What happens? We near miss to it. People tried to sell it, whilst the orders that were likely above price at that area are likely dragging price up. So we break above there. Okay, and then we push to the downside. And then we have the impulse correction continuations that we typically look for. And I'm just seeing this as an impulse correction continuation to take us down to, I've got my target here just because this is where I would actually manage it. But if we are heading down to that area, we will likely take out this sharp hook point here, this sharp low. And if we've retraced that much of this overall move, then it's highly likely, just looking at this Fibonacci tool, that we will find our way all the way down to the bottom to take out this low here. Okay, now we do have to factor in the DXY's positioning as well. We may not get all the way there if the DXY, the dollar index longer term, is heading to the upside to potentially take out these highs here. Then that will likely take the Kiwi dollar up, and maybe what will happen is that we will find our way down to this low here, form a bit of a base, or perhaps near miss to it, come back down and then form some kind of reversal structure, okay, and then move to the upside there to take out those highs that we near missed to. That's a possibility. So I'm just factoring in all these things, but quite simply, these trades here are what I used to take when literally just before I joined the Falcon community, and I didn't know very much at all. I literally only knew what I'd seen about the Falcon strategy on YouTube. Literally all I used to do is I used to wait for these massive moves down like that, a larger consolidation there that I could see clearly on the 4-hour chart. And literally all I used to do is wait for price to get to the high. I used to look for a little bit of consolidation there. I used to place a little entry on the break of a phase line such as that, and then I used to get short, and I was actually profitable literally just doing that. So okay, sometimes as you add in more things, it becomes more difficult to be more profitable because you try and time the entries better, and that's where the skill comes in. Okay, sometimes it's easy to identify that we've just had a massive move down and a consolidation, and then you just look to get short. But that's what I used to do back then. So what do we have here? We can clearly separate the structures. Okay, we kind of fall out of this running channel. We form a separate structure there. Okay, where we have the we tap above that high. We take out all the liquidity. We tap into this high. Okay, by way of this kind of 3-touch structure there. and we even have that kind of 1, 2, 3 middle section. We break above, we completely drop out. Okay, we form a little tight consolidation on the break, which is often what we see, and then we form a completely separate structure. Okay, so when there's a completely separate structure, I kind of like these because that you lower the risk that price could actually turn into something else, that the structures could actually turn into something else. I am mindful of the fact that this is getting slightly wide relative to the impulse down, which increases the neutrality of these structures, meaning that they start to become a little bit less likely to play out in the forecasted direction. But maybe that kind of ties in a little bit with what the DXY is doing. But regardless, you can see here that we kind of have this, we have that structure there. We have a bit of a middle section. Price semi commits, but it doesn't tap in, probably because it hasn't tapped into the area of value. And now I'm just seeing this. Okay, I'm just seeing this as a potential, whoops, 1, 2, 3 to tap into that area of value, and this is the kind of middle section, because you can see that the impulses will likely be of a similar length. Normally I wouldn't have this on watch if it's this far away from the area of value, but we have news coming out of the United States this afternoon, and I believe it's FOMC or something coming out at 7 o'clock, which may be the catalyst which causes it to get up to that area. So with all of that in mind, what I'll be looking for is price to tap into this area, which it keeps near missing to, and then I'll be looking for that push down on the 1 hour chart, followed by a 15-minute consolidation. And then I would look to filter this on the 5-minute chart. And if the 15-minute consolidation was structured, then I'll be looking to get short with a risk entry within the flag if I could, or a reduced risk entry on the break of the flag if I couldn't. Okay, so if it was just consolidation, and then even if we reverse from this area here, I'll be able to manage that down to the lows for something in the region of 7%. We've got 3% to that low, 4.8 to that one, and 7 to the low. Okay, so that is Kiwi dollar. Moving on, pound Kiwi is a bit more complex, I think, so I'm going to take a bit more time on this, no doubt. So on the higher time frames, we have, if we zoom right out, we have this wick which near missed to this high here. There was a sharp exchange of liquidity there, and we near missed to it by way of this wick. We then near missed to the wick by way of this high here. Okay, and you can see I'm just seeing this as an impulse correction, bit of a steep one, continuation to push higher to potentially take out that high there. We know that the continuation leg out of an impulse correction continuation tends to be of a similar length. That would take us up to there. Okay, and if we just drill down a little bit, you can see that we have retraced, we have near misses again. We have a near miss to this high, a near miss to there. So it's likely that they will be taken out. We've now retraced this high retraced, what was it, about 60 to 70% of this move, giving me a clue that we'll likely find our way up to there. If we just drill down, what have we had? Now, we do have to be slightly mindful. I am mindful of the fact that we do have a reversal structure here, okay, which has tapped into this exchange of liquidity here. Okay, we kind of near missed to it by way of the second touch, and we tapped into it. So this could be, okay, an impulse correction continuation to push lower after a reversal structure which is tapped into there. Okay, which therefore means that, okay, if I just drill down, that we could, this could be this could be a move like that, which gives us a further bear flag, which taps into this exchange of liquidity and then pushes lower, okay? Because we have that reversal structure, that larger flag, and then we've moved into this. And if we just drill down, that starts to become a little bit clearer, okay? But obviously, this is a daily forecast, so if that structure was to form, that wouldn't be ready by the end of the day. But it kind of ties in because we have these slightly smaller consolidations into this larger one, and then potentially we have a smaller consolidation on the break, which maybe we might near miss to that area, get this, then tap into it, and then push lower. Okay, so if I'm looking to get long, we also, just to touch on it, we've tapped into this area of value and we've moved up quite correctively. Okay, so what mitigates And if we just measure this, right, from there to there, that wouldn't be disproportionate. Okay, so this overall, or even if we measured it to there, okay, this impulse down, okay, I know that if we are moving to the downside, then pound Kiwi often, usually the line in the sand is the 50% rule. But I've noticed that corrective pairs such as pound Kiwi often pull back 60% of a move, okay, if they're going to go short, and not necessarily 50%. So if I was to basically get long, if I just remove that all off of the charts for a second, okay, if I was to get long, if I was to try and get long here, okay, I could easily be tagged in. If I was to look for a correction there, tagged in, tagged out, and then priced to something like this, and then that becomes a bear flag which pushes lower. So how do I mitigate the risk? How I mitigate the risk is as follows. If we break above this area of consolidation, then we would have retraced about 70% of the move, okay, and we would be trading back above all of these lows and above here, which could be, as I said, the base of that larger bear flag. So, okay, my mouse is just completely packed up. Okay, we're going to have to improvise because I think my mouse is just about dying, and I don't know how I'm going to do this without the mouse because I cannot do it on the mouse pad. Okay, so this is what happens in life and in trading. You have to improvise. So what I'll be looking for without a mouse is an impulse above this area of value to mitigate the risk of what I've just said at manifesting. And then I'll be looking for a 15-minute consolidation. And once again, I would look to see if I could filter this on the 5-minute chart if the 15-minute consolidation was structured. Okay, and then I would look to get long. And then as a first target, I'll be able to manage this up to here for something in the region of, we can't see now because my mouse is doing all kinds of crazy stuff. Okay, this is almost impossible for me to make this video now, but you can see that we'll be able to manage it for something in the region of 3%. Okay, and of course then we have the higher targets, which is those highs that we keep near missing too. So without a functioning mouse, I'm going to try and break down dollar Swiss. You always have to be prepared in trading and in life because okay, now my mouse is working again. Okay, so some strange stuff is going on here. So dollar Swiss on the higher time frames, we have this sharp move down followed by this sharp move up, and then we have that 1, 2, 3 touch structure there, and we have that middle section, that corrective middle section. We then tap into that area and we push up aggressively. And I like the fact that we're trading back above here now and back above this low. Okay, my mouse is completely packed up again. I don't know what is going on today, but regardless, I don't know how you're supposed to do this without a... okay, so we have this... How do you drag the screen up? Okay, you seemingly can't, which is interesting. Okay, this is virtually impossible for me to do this video now. Let me see if I can... Right, so the mouse is back on again. Right, so we have this impulse correction continuation to push higher, and I'm just seeing this as a further impulse correction continuation to push higher. And then what I've done is I've changed. Notice yesterday I had this on as my area of value, right? But we've tapped into this multiple times. Okay, the mouse has gone again. We've tapped into this multiple times now, and price has not found enough liquidity to send it to the upside. Okay. All right, there we go. At least I'm able to drag it using the mouse pad. And if we just drill down to the 1 hour chart, try and auto scale this using no mouse. Okay, this is this is not uncommon for things like this to happen, but it is what it is, right? Okay, so I have absolutely no idea how I'm supposed to drag this chart. Right, okay, the mouse is back on again. Right, so we've tapped into the area multiple times and price did not find enough liquidity to send it to the upside. And if we just measured this, okay, and assume that this is an impulse correction continuation and that this is a potential reversal structure that would take us down to this sharp hook point there. Okay. Now, one of the reasons I wouldn't, okay, the mouse has gone again. One of the reasons I wouldn't be looking to um, for a tap into this area, right? So if we just tapped below here and then we pushed up and then we flagged there, given that price has rejected from here multiple times, right? If I was to get long with something like this, I'd potentially be trading into what may be the retest of the back end of all of this, okay, or of all of these lows, okay. So you could easily be tagged in, tagged out, and then this forms some kind of bear flag. Me trying to do this on the mouse pad now to push lower, okay? Especially since if we just zoom up, let's see if I can do this without a mouse. We have a reversal structure up here, okay? So that's also my thinking as well, okay? So what I'll be looking for specifically, because price tapped into this area multiple times and has not found enough liquidity to send it to the upside, what I'll be looking for, and this is really difficult trying to do this with no mouse, what I'll be looking for is for price, there we go, to tap into that area of value, okay, because it didn't find enough from here. But then I'll be looking for a push back up above these lows, and then I have mitigated the risk of a retest of the back end of all of this for a move to the downside, okay? So we tap into there, that's likely where the liquidity is. If we push back up, then obviously this was not a retest of the back end of all of this, because the confirmation afterwards would confirm that we're not retesting these lows, because if we were, then we would use, more often than not, we would just spike above, spike back down, okay? So the consolidation afterwards is the confirmation that it's not a retest of these lows, and that is likely if we got the 1 hour push up, just the banks and the bigger players stacking their orders for the next wave to the upside, okay? And then I would be able to manage it up to, okay, let's see if we can't seemingly drag the risk to reward tool, but I'll be able to manage it up to here for something in the region of 1.5 to 2%, okay? These highs here, just not disregarding this wick because it looks like a bit of an outlier. And then obviously to this target, we would have something in the region, I'm guessing now because I can't click on the risk to reward tool, something in the region of 4 to 5%. And then of course, the higher time frame target may kick in. That is my forecast for today, folks. I hope you've enjoyed this video. I do apologize for the hardware issues that I'm having at the moment, and I shall try and mitigate that in readiness for the next video. But have a great day, folks. I hope you've enjoyed this, and I'll see you again in the next video. Thanks for watching.